In the world of finance, there are people who follow the crowd, and then there are the few who see disaster coming before everyone else. In 2008, while Wall Street celebrated record profits, one man quietly prepared for collapse. His name was Michael Burry, and what he discovered would shock the entire financial world. Michael Burry wasn't born into wealth. He wasn't a billionaire hedge fund manager from New York. In fact, he was a doctor, a quiet, introverted man who spent most of his time reading financial statements late at night while working in medicine during the day. But unlike most investors, Burry had an obsession. He didn't follow hype. He followed numbers, patterns, weaknesses, and hidden risks nobody else wanted to see. In the early 2000s, America was experiencing a housing boom. Banks were giving loans to almost anyone. People with no stable income, no savings, sometimes no jobs at all, were buying expensive homes. Wall Street loved it because every new mortgage meant more profit. Banks bundled these risky home loans into complex financial products, then sold them to investors around the world. And everyone believed one thing: housing prices will always go up. But Michael Burry saw something terrifying hidden beneath the surface. The loans were unstable. Millions of Americans could not actually afford their homes, and if interest rates increased, the entire system could collapse. At first, nobody listened, because on the outside, everything looked perfect. The stock market was strong. Banks were making billions. The economy looked unstoppable. But Burry kept digging deeper. Night after night, he studied thousands of mortgage documents, and what he found was disturbing. Adjustable rate mortgages, exploding interest payments, loans designed to fail. It was a financial time bomb. And then, Michael Burry made a decision that sounded insane. He decided to bet against the American housing market. Not just slightly, billions of dollars worth. Using a financial instrument called credit default swaps, Burry essentially predicted that mortgage bonds would collapse. If he was right, he would make a fortune. If he was wrong, his entire hedge fund would be destroyed. Investors thought he had lost his mind. Some demanded their money back. Others accused him of gambling recklessly. Even major banks laughed at him, because nobody believed the housing market could fail. But Burry stayed calm, because he trusted data more than emotions, and that's what separated him from everyone else. Most people look for confirmation. Michael Burry looked for truth. Months passed, then more months. The market kept rising, and Burry's investors became furious. Millions of dollars were disappearing. The pressure became unbearable. Phone calls, threats, panic, but he refused to change his position. He believed the collapse was inevitable. Then, 2007 arrived, and suddenly, everything started breaking. Homeowners began defaulting on loans. Mortgage payments exploded. Housing prices started falling, and the financial system began cracking apart. The same banks that mocked Burry were now facing disaster. Panic spread across Wall Street. Companies collapsed, investors lost everything, and one of the biggest financial crises in history had begun. The 2008 financial crash wiped out trillions of dollars. Millions of people lost jobs. Families lost homes. Entire economies suffered. But while the world panicked, Michael Burry's prediction became reality. His hedge fund made massive profits, hundreds of millions of dollars. He had seen the collapse before almost anyone else, not because he was lucky, but because he was willing to think differently. And that's the part most people misunderstand. Success in markets is rarely about intelligence alone. It's about emotional control, the ability to stand alone while everyone disagrees with you. Most people follow crowds because it feels safe, but crowds are often wrong, especially in finance. Fear and greed control markets more than logic. When everyone becomes greedy, danger usually hides nearby. And when fear takes over, opportunity often appears. Michael Burry understood this deeply. He understood that markets are driven by human psychology, not just numbers. That's why the greatest investors in history often look crazy before they look brilliant, because true conviction is uncomfortable. It requires patience, isolation, and the ability to ignore noise. Even today, Michael Burry remains one of the most mysterious figures in finance. Quiet, private, obsessed with research. He rarely seeks attention, but his story became legendary because it revealed something important about the financial world. Sometimes, the biggest opportunities appear when everyone else is blinded by confidence, and sometimes the most dangerous moments feel completely safe. The 2008 crash was not just a financial disaster. It was a lesson about human behavior, greed, blind optimism, and the cost of ignoring reality. Because history repeats itself. Again and again, markets change, technology changes, but human emotions stay the same. Fear, greed, hope, panic. That is why financial bubbles continue to happen, and why people continue making the same mistakes. Michael Burry didn't predict the crash because he was magical. He predicted it because he questioned what others blindly accepted. And maybe that is the real lesson, not just for investing, but for life itself. Because sometimes the ability to think independently is the most valuable skill of all.